Tomorrow, millions of people are going to hand their money to the most hyped IPO in stock market history. And right now, in this moment, before the opening bell rings, Vaultrax needs you to stop. Take a breath, and actually think about what is happening here. This is Vaultrax. We open the vault. You make the call. Let's get into it. SpaceX is pricing tonight at $135 per share. That gives it a valuation of $1.77 trillion. Bigger than Microsoft, bigger than Saudi Aramco. The single largest IPO in the history of the stock market. And every financial channel on YouTube right now is telling you this is the opportunity of a lifetime. But here is the question nobody is asking out loud. If this is such a great deal, why are they giving it to you now? Here is what you need to understand first. This party started a long time ago, and by the time they sent you an invitation, the host and his friends had already eaten, already taken the best seats, and already helped themselves to everything worth having. Let's talk about the guest list. Peter Thiel's Founders Fund got into SpaceX in 2008, when the company had just failed 3 consecutive rocket launches and was nearly dead. They invested $20 million at a valuation so small, it doesn't even register on today's scale. In share price terms, we are talking about fractions of a penny compared to the $135 you are being asked to pay tomorrow. Today, that $20 million bet is worth over $60 billion. That is a return of approximately 62,000%. Google and Fidelity came in during 2015 at a company valuation of around $12 billion. In equivalent share price terms, that translates to roughly under $1 per share adjusted for where the company sits today. They are being handed a 100 times return, and tomorrow you are being asked to buy in at 135. Sequoia Capital, Andreessen Horowitz, Valor Equity Partners, sovereign wealth funds from the Middle East. They have all been inside this company for years, some of them for over a decade, at prices that make today's IPO price look like the most expensive ticket ever sold. And now the door's open for you. Think about what that actually looks like. Picture the most exclusive party in financial history. The host, Elon Musk, and his closest institutional friends walked in years ago. They got in for almost nothing. They took the best positions. They built real wealth sitting on their stakes while the company grew in private, away from public scrutiny, away from quarterly earnings pressure, away from any obligation to explain themselves to you. And now, at the absolute peak valuation, at the highest price this company has ever carried, they are rolling out the red carpet for everyday investors. They are giving you 30% of the float, 3 times what retail investors normally get. They are calling it generosity. They are calling it the democratization of investing. But here is what Vaultrax calls it. They need your money to flow in, so the price keeps moving. Even the investors who are not selling immediately benefit the moment retail buying pressure drives the stock higher. Every dollar you put in tomorrow increases the paper value of positions they have held for a decade at a fraction of your cost. You are not joining the party. You are cleaning up after it, and being charged full price for the privilege. And there is more layered underneath this. The lockup rules that are supposed to protect you, the standard 180-day restriction that prevents insiders from dumping shares after an IPO, have been quietly restructured. SpaceX's filing reveals a staggered early release system. Insiders can begin selling 20% of their eligible shares as soon as the very first earnings report, potentially as early as July. Additional tranches of shares unlock at 70, 90, 105, 120, and 135 days after listing. That means from the moment this stock goes live, there is a pre-scheduled pipeline of insider selling opening up every few weeks, all while you are still holding with excitement and emotion from day one. Now let's talk about the X factor, and we mean that literally. When Elon Musk bought Twitter for $44 billion in 2022, a group of private investors backed him with over $10 billion in equity. For a long period, some of those investors watched their stakes written down by as much as 75%. One well-known investor publicly said his position was essentially worthless. A jury in California later found that Musk had misled Twitter shareholders during the acquisition, with potential damages reaching $2.6 billion. These were real investors who got burned badly. But here is the twist. After Twitter was merged into XAI and then absorbed into SpaceX, those same early X investors now collectively own approximately 5% of SpaceX at a $1.77 trillion valuation. That stake is worth close to $100 billion. Some of those investors are looking at returns of 200% or more after years of pain and losses. Now here is where the story gets deeply uncomfortable, and we want you to think carefully about what we are about to tell you. In April 2022, Musk offered to buy Twitter at $54.20 per share, a 38% premium. Shareholders were celebrating. Then came the tweets. A single tweet saying the deal was temporarily on hold sent the stock plunging nearly 10% in one session. As uncertainty grew and Musk publicly threatened to walk away entirely, Twitter's stock collapsed, falling from the mid-50s all the way down to $34 a share at its lowest point. Everyday investors, teachers, nurses, people with retirement accounts, panic sold at $34, $36, $38 a share. A California jury in March of this year determined those tweets were false and misleading, that those shareholders sold at artificially deflated prices because of statements that were not true. Estimated damages of $2.6 billion. And then, after months of chaos, Musk completed the deal at the original price of $54.20 anyway, exactly what he offered from day one. The people who held on got the full price. The people who sold during the chaos, the ones a jury just said were misled, they left billions on the table. Now here is the twist nobody is connecting. Those institutional investors who stayed in through the pain quietly became SpaceX shareholders through the merger chain. Twitter into XAI, XAI into SpaceX. And today that stake is worth close to $100 billion. Whether that is genius, whether that is guilt, whether that is simply God's sense of humor, Vaultrax is not going to tell you what to think about that. But here is what we know with certainty. And this is where every retail investor watching this video needs to pay close attention. It is not just the burned ex-investors who have an exit window opening. Think about who else is sitting at this table right now. Google bought into SpaceX in 2015 at a company valuation of $12 billion. Today, their stake is worth an estimated $100 billion. That is a 100 times return. Founders Fund invested $20 million in 2008 when SpaceX had just failed 3 rocket launches in a row. Today that $20 million is worth over $60 billion. That is a 62,000% return. Fidelity, Sequoia Capital, Andreessen Horowitz, Valor Equity Partners. Between them, they hold billions of dollars worth of SpaceX stock, bought at fractions of the $135 you are being asked to pay tomorrow. And every single one of them is subject to the same staggered lockup structure. Starting as early as July, just weeks away, 20% of eligible insider shares begin unlocking. Then again at 70 days, 90 days, 105 days, 120 days. A steady pre-scheduled pipeline of selling pressure building up in waves. From the ex-investors, from the early venture funds, from the institutional giants who have been sitting on 1,000% returns for years. None of them have announced they are selling. None of them have to. But ask yourself the most honest question in investing. If you bought something for $1 and it is now worth $100 and a legal window to exit just opened, what would you do? Now multiply that by billions. That is the pressure building behind this stock the moment retail investors flood in tomorrow morning. You are not just buying a stock. You are potentially becoming the exit liquidity for some of the most sophisticated investors on the planet. People who got in when the price was measured in cents, not dollars, and who've been waiting years for exactly this moment. The lockup structure is written into the S-1 filing. The ownership stakes are public record. The exit windows are dated. The returns these investors are sitting on are documented. This is not speculation. This is the architecture of how this IPO was built. You connect the dots. Now we know exactly what some of you are thinking right now. What if they just hold? What if Google, Fidelity, Founders Fund? What if these giants simply keep their shares and ride the rocket higher? It is a fair question, and Vaultrax will give you a fair answer. Ask yourself what institutional investors actually are. They are not fans. They are not believers. They are not buying a bumper sticker. They are funds with mandates, with performance targets, with investors of their own who expect returns. When a position has made 62,000%, like Founders Fund, holding indefinitely is not a strategy. It is negligence toward their own investors. History is also unambiguous on this point. Academic research examining nearly 2,000 IPO lockup expirations found that when lockups expire, trading volume permanently increases by 40%, and stock prices drop. Every single time. And the research found that venture capitalists, the exact category of investor sitting on SpaceX right now, sell more aggressively than any other class of insider when those windows open. This is not speculation about SpaceX specifically. This is simply what institutional money does. It takes profit, it rebalances. It exits positions that have served their purpose and reallocates to the next opportunity. And here is the part that should make every retail investor think twice. These institutions are not leaving forever. They know SpaceX is a generational company. They will likely come back. But they will come back at a lower price. After the hype has faded. After the lockup waves have passed. After retail investors have absorbed the selling pressure and the stock has found its real floor. They will sell to you today and buy back from you in 6 months. That is not a conspiracy. That is just how institutional money has always worked, and now you know. You connect the dots. The IPO makes those people whole, and then some. So when you ask who this offering is really engineered to serve, there is your answer. Now here is where Vaultrax must be absolutely clear, because none of this is an argument against SpaceX the company. SpaceX is a generational company. Full stop. What they have built is one of the most remarkable technological achievements in human history. Reusable rockets that land themselves. A satellite internet constellation serving over 10 million subscribers. A Starship vehicle that could redefine how humanity moves beyond this planet. The rockets are real. The technology is real. The moat they have built is real. Vaultrax is not here to tell you SpaceX won't succeed. We are not here to tell you the rockets won't fly or that Starlink won't take over global internet infrastructure. It very likely will. SpaceX is probably a company you should own at some point in your investment life. What we are telling you is this. The milk they are selling you today has not been proven fresh yet. The price you are being asked to pay is built entirely on promises, on a future that has not arrived. And the people selling it to you got their shares for a tiny fraction of what you are paying now. Morningstar, one of the most respected independent valuation firms on Wall Street, puts SpaceX's current fair value at approximately $780 billion, less than half the IPO price. Their analysis is not pessimistic. It simply says, show us the results first. Prove that Starlink can reach 100 million subscribers. Prove that xAI can compete with OpenAI. Prove that Starship generates commercial revenue. Prove it in earnings reports, in real numbers, with the full transparency that comes from being a public company. Because right now, xAI is projected to burn $10 billion in 2026 alone. X, formerly Twitter, still carries over $1.2 billion in annual interest payments from the original acquisition debt. And SpaceX itself posted a loss of $4.28 billion in just the first quarter of this year. You are not buying a profitable
company.
You are buying a bet on a future that the people who got in cheap are now asking you to fund at full price. So here is the Vaultrax verdict. If you are trading tomorrow for a quick pop, understand that the float is thin, volatility will be extreme, and the same structure that could push the price up fast could reverse just as hard within weeks as insider tranches begin unlocking. If you are a long-term investor, the smarter position may be to wait. Let SpaceX report 1 or 2 earnings quarters as a public company. Let the real numbers speak without the noise. Let the lockup waves pass. History shows that the best entry point on major IPOs is almost never day one. It is 3 to 6 months later, when the hype fades, when the people who got in cheap have had their chance to exit, when the price settles on what the business actually is, rather than what everyone hopes it will become. SpaceX is a company worth watching closely. The question is whether today, at this price, with this much still unproven, with this many insiders positioned above you, is the right moment to act. We do not think the timing is right. But we opened the vault. Now you make the call. Are you buying tomorrow, or are you waiting for the proof? Drop your answer below. That debate is exactly what this channel was built for. This is Vaultrax. We will see you on the next one.
Subscribe for more videos like this.